Hello, ladies and gentlemen. Good morning from here. And depending on what time zone you are tuning in from, I wish you a good afternoon and good evening. Welcome to our midweek review of the Forex Morning Mastery, where our utmost intent for today is to review how well the asset we are monitoring for this week has been doing, and of course use that historical data to prepare ourselves for the second half of the week. Well, since the beginning of the week, we have been monitoring three financial instruments as usual, which includes the US All Spot, the USDJPY, and of course my favorite, which is the XAUUSD, popularly known as the Gold Spot. And so far this week, we've done tremendously well. We have been buying the US All Sport since the beginning of the week. We also had the privilege of also jumping into some buy position later on yesterday stroke this morning, despite some choppy market condition. And of course, the Hexa USD has done pretty well since the beginning of the week. So today we are going to be looking at all of these assets and see how we will be managing that trade, our existing position, and of course prepare ourselves for the big moves that may likely come for the second half of the week. So in preparation for today, I have some interesting trading setup that I'm excited to share with us this morning, so you don't want to miss out on it. Stay tuned in, grab your favorite beverages, coffee, biscuit, what have you, and be part of the session till the end, so that you get yourself well equipped for today's trading session. For those who are joining us for the first time, you're highly welcome on board. Very glad to have you around with us this morning. The Forex Morning Mastery is an educational avenue where we all come together as a community to better our skills in trade management, especially on the asset we are monitoring. This is not a signal service platform, but an educational avenue where we come together to understand the behavioral patterns of market participants through the lens of fundamental and price action analysis. So we usually run these three times in a week, that is Mondays, Wednesdays, and Fridays, 8:30 a.m. UTC and 9:30 a.m. West African time. So you are highly welcome once again, and I do encourage you to actively engage in the comment section. And do not forget to give that video a thumbs up. Your likes are valuable to me, and of course it also inspires me, and at the same time it goes a long way in helping the algorithm identify the video and pushing it to a wider audience of traders who may find the content beneficial to them too. So with that said, here we will be diving right into the business. I see you in the comment section, Adini Babalola. Good morning to you. Glad to have you around with us this morning. All right, no problem. All right, okay. So I'm very glad to have you join us this morning. And you said I need you. Okay. All right. I don't understand what that means, anyways, but I'm very glad to have you join us this morning. So, with that said, here we will be diving right into the business. And as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market for today. And of course, we are also going to be looking at what are the economic events that had influenced the sentiment around the market we have monitoring so far this week. And by checking on the economic calendar, one thing we tend to gain is to correlate find potential correlations between key economic releases and specific technical patterns on the chart, giving us valuable information and most importantly timing to strategically position ourselves for the next move. Now, based on the asset we've been monitoring this week, we are focusing on events from both the United States and Japanese economic docket. Now, we usually focus on high impactful event. However, on days where we do not have high impactful event, we tend to filter and include the mid-tier economic features so that we can have a broader view into what market participants are looking forward to make any investment decisions. Now, this week so far, we've had some important events. For instance, on Monday, we had on Monday, November 18th, we had an high impactful event from the Japanese economic docket, and that was the speech from the Bank of Japan's governor, Ueda. And it's a couple of speeches, and I think it will run into Thursday. I talked about this on Monday. Okay, so you can see here we still have him going to speak tomorrow. And one important thing about these speeches of bank governors is the fact that it helps market participants have an insight into what the bank is thinking about the economic situation, monetary policy decision, and potential future rates decisions that may likely happen. And this gives the markets an insight into what is going on in that economy, giving them signs whether or not to continue to hold on to the currency assets of that economy or probably drop it as soon as possible. However, one of the major highlights we can get from the Bank of Japan's governor is the fact that he did acknowledge that there is the possibility of a rate hike, which could definitely provide a potential upside for the yen. This is one of the major highlights I was able to come up with. However, there is still this uncertainty over the timing of that interest rate hike, which of course has fueled expectations of prolonged lower borrowing costs, which has been weighing on the Japanese yen in the last couple of months. Now, besides this, we also have some other events. Okay, we also had the speech from the Fed official. That was Goolsbee, though he's a non-voting member. I'm yet to get a highlight on that one. Then yesterday, I remember I told us on Monday that one of the highlights that I would love to look out for, though it's not an high impactful event, and that is the the building permits. And I did went on to mention how sensitive the housing sector is, and how it has a potential of causing some volatility in the US dollar market. And this data here shows or gives us an insight into the number of permits for new construction projects in the last month. And from the data we saw here in the previous month, we saw a 1.425 million new building permits for constructions, and market participants were actually projecting a positive outcome with a 1.43 million expectation. However, the market was disappointed as we saw a deficit of 0.6 million, giving us a deficit deviation of 38.903. And of course, this data wasn't that impressive, and we saw how the market reacted negatively to that report. So we are going to be looking at the chart in a moment to see how this has happened and what the implications are in the market, and how we intend to strategically position for today's trading session. Then besides this, we also had some mid-tier economic features from the Japanese economy, like the exports and imports data, which obviously came in positive. We saw that Japan had an increase in exports over the import for the month of October, which is quite an impressive data. If we compare the data to the previous month, we saw that the export for the previous month was at a deficit of 1.7%. Now, with an increase of about 1.1% export, it shows that there is a high demand for Japanese products from the global market. So it was a higher export than the imports. However, in as much as we had a positive data for the exports, the merchandise trade balance comes in way lower than what the market had expected. In fact, it was way below what the previous month data said. As you will see here, we had a deficit of 46.2 billion Japanese yen. Now, what is the merchandise trade balance? Well, this is a data that nets the result of Japan's exports minus imports, and this comes in value. This comes in value, unlike the export and import data, which comes in the quantity. This one comes in the value of the trade balance. And with this data, despite the huge exports for last month, the trade balance shows that while there is a strong export performance, which is positive, the continuing trade deficit keeps overall pressure on the currency, and this dynamic indicates that external demand for Japanese goods isn't yet enough to offset domestic reliance on imports, which may cap significant yen appreciation in the near term. So this is not looking very promising for the Japanese yen. So for those of us who are monitoring the USDJPY, we will be looking into the charts to see how this has influenced the market sentiment and how it will definitely drive the market sentiment for today. So you want to be staying tuned in on that one. Then today, Wednesday, November 20, we do not have any high impactful event to look out for. So all we have today are speeches from Fed officials, which everyone definitely will be looking forward to them, especially after the recent stall in momentum from the US dollar market dynamic. So today we are going to be looking at a handful of speeches. We have one coming in at 3 p.m. UTC, 4 p.m. UTC, 5:15 p.m. UTC, and later in the day, 9 p.m. UTC. So we do want to know what the Fed officials are saying, what are their sentiments as regards to policy decisions, interest rate decisions, and what they think about the victory of Donald Trump, which everyone expects an expansionary economy under the Trump administration. So this is one event we definitely want to be looking forward to. So since we are not going to be doing the Forex Morning Mastery tomorrow, it's important I also mention what to look out for tomorrow based on the asset we are looking at. We definitely want to see what the Bank of Japan is going to say tomorrow. Then we're also going to be looking at the labor-oriented data, that is the initial jobless claims count report, which will be giving us an insight into the number of people filing first-time claims for state unemployment. So this data here, if it comes in negative, if the data comes in larger than market had expected, it will be a negative signal for the US dollar. And if it comes in lower than market had expected, it will be a positive signal. So it shows that the labor sector is tight. Then besides that, I think we also want to look at the manufacturing survey report as well, which is also considered to be a sensitive sector in the United States. Then we also have a bunch of speeches from Fed officials tomorrow. And also we want to have an insight into the consumer price index from the Japanese economy. Remember, this is an inflationary data, which will definitely be giving us an insight into the inflation level in the Japanese economy. So these are events we definitely want to be looking forward to. And from our experience here, we do understand that the anticipation of these events usually influence the sentiment in the market, and this will definitely reflect on the chart as structural patterns that we are going to be using to strategically position ourselves for the next move. So with that said, let's dive right into the chart. And as always, the first asset we're going to be looking at this morning is going to be the US All Spot. So please give me a second, please. I will be right back. So I'm sorry about that. I had to attend to the background noise here. So, like I was saying, the asset we are looking at first is the US All Spot, and so far this week we've done pretty well on this particular asset. We've been buying the US All Spot since the beginning of the week, and luckily enough for us, the market had continued to move just as we had expected. So let's look at what has really happened in the last 2 to 3 days for educational purposes, and then after which we look at the market drivers that is influencing this market. So for those of us who are part of Monday's session, remember we did identify a structural detail on the 4 hours time frame where we saw price action break out of that descending trend line. Can I show you? Okay, let's look at it together again so that we can all be on the same page. So scaling up into the 4 hours time frame, which was where our trading analysis started from. Remember, we acknowledge the fact that price action was sitting within above that demand zone between the $65.50 level and the $67 area. Remember, the $67 level was our key level for this week, and you know how we use our key level. As long as price remains above the key level, we want to continue to look out for patterns and structures that support the idea of buying. Now, in addition to that was this critical descending trend line, which did acknowledge the bearish momentum in the last couple of months. And one interesting thing about this descending trend line we talked about at the beginning of the week was the fact that price action a couple of times had broken out of that descending trend line. And theoretically, when price action breaks out of a key structure like this, we expect that at some point in time price will come back, retest the structure in an attempt to continue that uptrend move. So based on this ideology, we were looking out for buying opportunities around the structure. And we also emphasized that if price action at any point in time breaks down, retested the key level at the $67 area, we will be considering selling. However, after monitoring the character of price action around the $67 area on Monday, we were able to identify a simple structural detail to guide our decisions for this week. Now, look at what we identified here on Monday. So right around our key level, we noticed how price continued to oscillate around the key level, and in the process, it transitioned into a range-bound structure where price action was confined within the $67.30 level and of course the $66.58 area to emphasize the prevailing uncertainty during that time frame. And with the structure identified, it made our job a little bit easier as we exercise patience, waiting for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And within that range bound structure, I did indicated here that I will be willing to join a buy at the retest of this key level at the $67 area, and then add another buy position at the break of the $67.30 level. So as you will see, since that moment, price had continued to climb and find new highs. Then during my update yesterday, I did give us an update on my Telegram platform that we should be moving all our stop losses to secure the current buy position, and then look out for more buying opportunities if price action will break out of the, as at yesterday, I was using the $69.45 level, and then during the course of the New York session yesterday, we saw a little bit of choppy market condition, which resulted in price taking us out of all the buy positions with a reasonable amount of profit. And as at this morning, I begin to notice that things are beginning to change, and this could be in respect to the recent development in the global market. Now, first of all, while the geopolitical risk and potential supply disruption in Eastern Europe and the Middle East offer strong upside potential for the crude oil prices, the sluggish demand from China may continue to exert a counteracting bearish pressure on the oil market. So, in the last 24 hours, we've seen geopolitical tensions escalate, like the Ukraine's use of US ATACMS missiles and Russia's subsequent response to lower the nuclear strike threshold. And this is raising fear of broader conflict. And this could definitely support oil prices due to the potential supply disruption from this particular area, considering Russia to be one of the major supplier of the global market. And then we also have the risk tension also in the Middle East, where in recent times we had Iranian leader warning of a crushing response to Israel's airstrike, and this also is raising concerns about disruption in crude oil supply from that particular region as well. Now, with all of this, I strongly believe that the path of least resistance for crude oil still remains to the upside. However, in as much as the path still remains to the upside, we cannot ignore another major driver in the form of a weaker Chinese demand. And I think we've talked about this in the last couple of weeks, where we said China's crude oil demand declined by 5.4%. And this is reflecting a sharp slowdown in China, which is the world's second largest oil consumer and the world's highest importer of crude oil. And this could weigh in on global demand outlook. Then to further support this weaker Chinese demand, we also saw the IEA report yesterday, which projected that China's demand growth for the year was just at 140,000 barrels per day, which is way below from the 1.4 million barrel per day, which was seen in 2023. So this for me could be a counteractive balance in this particular market. So in as much as we're going to be maintaining a bullish bias, we need to be very be on standby in case that the sentiment shifts in favor of a weaker Chinese demand. Now, how are we going to be navigating this market? How is the market participant digesting these informations we just talked about? Well, if we look at the chart, we can see structural details to give us an insight into the behavioral patterns of market participants. Now, this morning, while I was looking at the chart, since the new week has begun, it is quite clear that the market is on an uptrend. And to emphasize this, I have this beautiful ascending trend line to work with for today's trading session. Now, you can see this trend line here had played a pivotal role in determining the direction of price action so far this week. Now, look at what happened here. On Monday, we saw price break out of the trend line for the first time. And ever since then, after the breakout, price did come back, retest the trend line, and then it continued the momentum. So, and you know how we use our ascending trend lines. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying. So with that said, I have my resistant line, new resistant line for the second half of the week at the $69.50 level, where I'm looking forward to the breakout of that temporary supply niche to continue my uptrend move. At this point, I already have a buy position triggered with price action moving over 29.30 pips in profit at the moment. And for those of us who did capitalize on that, well done to you. I gave an update yesterday. I do hope you saw it. If you saw it, you will have capitalized on this opportunity. But for those of us who had missed out on this opportunity, let's exercise patience and see if the market will come back and retest that structure to give us new chances to join the uptrend. So for those who had missed out, we shall be waiting for let me zoom in so we can see things clearly. So we shall be waiting for something like price coming back to retest the structure. It could even come to as low as that ascending trend line, where the appearance of buy pressure will give us an opportunity to continue the uptrend move. So at this moment, we continue to maintain a bullish bias on this particular asset. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials that sellers could also come into play. You know how we do it in this community. We try to keep a balanced approach to whatever decisions we are making. So where will be most suitable for us to join a sell if the market gives us that signal? Well, with an ascending trend line in place, it makes our job much more easier, as we will need price to break down this ascending trend line, which would be the first time in the last 2 to 3 days to give us that signal we need to join a decline. Now, for me, I will not be jumping into a sell right away due to the current situation. Remember, the path of least resistance for the crude oil still looking to the upside due to the geopolitical tensions in both Russia, Ukraine, and the Middle East. So a breakdown could turn out to be a false breakdown. So we will need to exercise patience and wait for price to give us a retest of structure where continued selling pressures indicate that buyers are losing momentum. Then we can consider selling. So I have a zone here around the $69.15 level, which lines up with the ascending trend line. By the time price breaks down the $69.15 level, it will have breached the ascending trend line and give us an opportunity to sell. So that is the only condition that will make me want to sell the US Oil Spot today. And if the tip, so where will the tippy target be? Well, maybe it will come back into the resistant line we captured at the beginning of the week, or the key level at the $67 area, dovetailing to between 180 to 200 pips if that will be the case. And please also note that even if we join a sell, we have a bust up around the $68.60 level, a level which has a memory for buying power. So if price drops into or close to that level, ensure you move all stop losses, secure your current buy sell position while we wait and see if the market will break down, retest the structure to add more positions to the existing trade. So this is my simple view on the US Oil Spot for today. I hope I made myself very clear, and this is in fact a simple setup to help us navigate this market today. So I encourage us all to mark out these levels accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions. So this is my simple view on the US Oil Spot. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So I see you, Wokocha Kingdom. Good morning to you. And in the absence of no questions, I want to assume that we are all on the same page. And please do not forget to give that video a thumbs up. I'm here to see your reactions to the video, to the session. Please do so, as it goes a long way to help promoting this community, as the algorithm will be able to identify our video and push it to a wider audience of traders who may find our content beneficial to them too. So thank you very much, guys, as you do so. So let's make the likes tally with the number of people on board. So with that said, let's move right into the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY, that is the US dollar against the Japanese yen. And of course, despite the old intervention fears and potential tightening of monetary policy in Japan, the US dollar continues to gain momentum, and this is as a result of the rising U.S. Treasury bond yield, positive risk sentiment, and a lingering uncertainty about the Japan's monetary policy direction. Let's run through the structure. Let's see what we were talking about concerning the behavioral patterns of market participant here on the 1 hour time frame. Remember, we did a top-down analysis on these assets on Monday. For those who missed out, you might want to be checking on that video to have a background knowledge of how we got to this point here on the 1 hour time frame. So at the beginning of the week, it was more of a choppy market condition, which revealed the uncertainty in this market as we saw price started the week around the 154.500, and then we saw the establishment of the resistant line at the 155.150. Then we also saw price drop into the 153.850 to establish the support line of that range bound structure. So as at the beginning of the week, the character of market participants showed us that there was an indecision, giving us a range bound structure to work with. And if you recall, we said here on Monday that we will be buying the 154.500, then adding more at the breakout of the 155.150. Unfortunately, the second position closed in a loss, while the first one closed had a worst case scenario break even. Now, throughout yesterday, the market was a little bit choppy as there was an indecision again, where we saw price trigger our sell position at the breakdown retest of structure. I think price moved about 60 pips before we were taken out. And if you remember what I said here on Monday, that we should be very cautious about the breakdown of the support line, considering the fact that price action is still sitting above that ascending trend line we spotted on the 4 hours time frame. So I think for the sake of clarity, let us go to the 4 hours time frame and let's see this together. So remember, on the 4 hours time frame, we had a major ascending trend line which has been supporting the bullish momentum since the beginning of the month of October. So I mentioned this during our live session that as soon as price gets close or moves into that ascending trend line, we move all stop losses, secure the position while we wait and see if the market will break down the trend line. And of course, that never happened. And then we saw the bullish momentum started again during the later part of yesterday's trading session, triggering the buy position one more time at the 154.500. And then remember, we also said we're having another point of entry at the 155.150. So at this point, you should be having minimum of two buy positions, where the first one is running with 120 pips and the second one is running with about 55 pips in profit, making a total of about 880 pips. And for those who stayed faithful to our analytical approach, well done and kudos to you. So the next thing we want to be doing right now, since price action had moved significantly, is to ensure that all positions are secured. So we want to be moving all our stop losses, and in fact, all stop losses right now should be right above the second entry. So the worst case scenario for the second position will be at break even, while the first position will be closing with about 65 pips in profits, which is not bad at all. Now, this is what we have done so far this week, and the question as we head into the second half of the week is whether or not the momentum will continue to the upside. Well, if we look at the driver in the market, I still strongly think that the positive driver for the US dollar outweighs the drivers for the Japanese yen. There is the rising US Treasury bond yield, which makes the US dollar stronger at the moment, diverting flows from the low yielding Japanese yen into a much more higher risk on investment ratio for the US dollar. And of course, the uncertainty over the timing of another Bank of Japan interest rate hikes continue to fuel expectations of prolonged lower borrowing costs. And then we also have the geopolitical tension in the Middle East as well, the Russian-Ukraine war, which is also going to be a major factor in this market. However, in as much as there is a huge positive driver for the US dollar, we cannot ignore the intervention fears, of course. Market participants still remain cautious about potential intervention from Japanese authorities to support the yen, and this could limit the upside trajectory. So that is one of the major reasons why we need to move our stop losses and secure the position. We don't know when this intervention can happen. Then secondly, we also have the Japan's export growth as well, which could also be a sentiment that buyers of Japanese yen could also bank on. I talked about this earlier, where we saw a 3.1% increase in exports in October, signaling a recovery in trade and partially offsetting the 461.2 billion trade deficit. Then the Bank of Japan, during a speech, also acknowledged the possibility of a rate hike, which could also favor the uptrend scenario for the Japanese yen. However, if we take all of this into account, well, I'm still going to be holding on to the bullish bias here, except the market structure changes and gives us signs that sentiment is shifting in favor of the yen. So at this point in time, I will be suggesting that if you had missed out on that bullish opportunity we took, you might want to exercise patience and see if the market will come back to retest the structure at the 155.150, which was broken this morning, and also lining up with that ascending trend line to continue that uptrend move. But if the market does not come back into structure, I think we could see price continue the momentum. We have another key level at the 155.750, which I want to acknowledge right away. You do want to be marking that level out on your chart as well, as this is going to be playing a crucial role in today's trading session. Now, look at how beautifully this level has also played a significant role during Thursdays of last week trading session. Then we saw on Friday of last week how price did break down and then retested that structure to the downside. Now price is back into the structure, as you will see here. Now we are at a crucial juncture where, depending on how the market reacts to this price level, will determine if we will be continue that uptrend move. So should price does not come back into the structure to retest it to continue the uptrend move, and instead it breaks out and retests the 155.750, it will be a good opportunity to continue the uptrend move. Now remember, our TP target is somewhere around the 156.800 and the 157 area. And why do we have our TP target there? Remember, we had this ascending channel structure marked out on the higher time frame. Let me show you quickly so you can see and be on the same page with me. So you can see we have the support line of the ascending channel right here, and then we have the resistant line of the ascending channel right there. So I'm looking at my TP target around that particular area. That is, if price action moves significantly into that particular area. So I'm looking at between the 156.750 and the 157.00 area. So we still have about a minimum of 100 to 120 pips to catch if the momentum continues in that particular direction. So scaling back into the 1 hour time frame, so let's see what happens around the 155.750. For those of us who captured the 2 buy positions we took this morning, you might want to be placing a buy stop order above the 155.750 just in case the momentum continues. It's still something we can risk, and then move all stop losses of all positions to somewhere around the 155.400. So should this drop back down, we get taken out in a loss on that one, but the profits from the 2 existing buy positions will reduce the total loss we have on this account. So let's see how the market will play out here. So we're looking forward to more buying opportunities above the 155.750. But if we get taken out and price drops back into the trend line, we look out for reversal setups like double bottom structures on 15, 10 or 5 minutes time frame to continue the uptrend scenario. So that is my view here. I still remain very bullish on the USDJPY. However, taking into account the potentials the sellers have in this market, the only condition that will make me want to start considering selling is for price to drop below this ascending trend line, retested to the downside, which for me is considered to be a short-term trading opportunity. So I will not be taking a sell except this ascending trend line, the support line of the ascending channel we saw on the higher time frame, is breached and broken to the downside. But if you are a scalper, a day trader who is willing to take on short-term trading opportunities, well, a breakdown of the 155.150 and the ascending trend line could be a beautiful opportunity to capture a move back into the support line of that ascending channel. So that's about 100 to 130 pips to catch there. So that is my view here. Like I did say, I'm not going to be selling in this kind of condition. I'll be looking for buy, and the only condition that will make me sell is this ascending trend line getting breached to the downside. That's when I will sell. But if you're a scalper, day trader, someone who takes short-term trading opportunities, you can be looking at a sell below this trend line at this point. So this is my simple view on the USDJPY for today. I hope I made myself clear. If you have questions or you need some further clarifications, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds off. I think that will be enough for us to mark out those levels accordingly on our chart, as we have illustrated, while I look forward to your comments. Stay tuned, and do not forget, give that video a thumbs up. This is the only and cheapest way you can actually support this community to grow. And thank you very much from the bottom of my heart. All right. So in the absence of no questions, I want to assume that we are all on the same page. With that said, I guess we can now move on to the final assets on our watch list for today. Stay tuned. So the final asset on my watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, we are at a crucial juncture in the market right now, especially for those of you who saw my last update on the XAUUSD yesterday. You realize that we are at a critical level as the complex mix of factors underscores the cautious tone surrounding the gold market at this point, balancing the geopolitical concerns with monetary policy dynamic and risk sentiment. Now, before we go into the fundamentals and technical details of what our plans are today, let's take a pause and run through what really happened at the beginning of the week and what led to the decisions we made. Now, for those of you who saw my commentary on Monday, remember we had a very beautiful structure that we said will be guiding our decisions for the first half of the week. Now, first of all, we saw how the market started the week on a strong bullish note. Price started at around the $2,566.50 level and found its first resistant line at the 2,597. So we actually missed out on this massive move, which totaled about 300 pips, and this obviously happened during the Asian session. And during my time, of course, I'm definitely fast asleep when this happened. And when we woke up on Monday, we were able to take into account that recent development to consider that the market for this week may be to the upside. So we were looking at two options on Monday to join that uptrend move, one of which was the expectations that price could come back to retest the key level and that descending trend line we marked out on the 1 hour time frame to continue the uptrend move, or price will break out of the 2,597 to continue that uptrend scenario. And in fact, the latter was what happened as we saw price breach the 2,597, trigger our first buy position for the week. And of course, I did have my TP target at the 2,640, which dovetailed to about 430 pips. And I was giving us updates along the line during the course of Monday stroke Tuesday's trading session, where I mentioned that we should be thinking or considering of adding more buy positions at the breakout of the 2,625. So for the first half of the week on the XAUUSD, we were able to take some significant amount of profit, after which we begin to notice some interesting development happen around these 2,640. As you will have seen here, that the last 12 hours has seen buyers find it difficult to break through the 2,640 zone. Now, if we take a long-term perspective outlook on this chart, you will see that this area is so crucial. Now, let's go back into the 4 hours time frame. Let's see why that is so. Now, if we look at the 4 hours time frame, remember we had this beautiful descending trend line marked out at the beginning of the week. So after connecting the series of lower lows, we have the support line of the channel, and then after connecting the series of lower highs, we have the resistance line. Now look at how beautifully when price got into the resistance line, we begin to notice selling pressure resume around that point, giving us signs that price is about to respect the resistance line of that descending channel to incite a sell-off, maybe back into the support line one more time. And if you look at that distance here, we are talking about over 700 pips to catch there if that is going to be the case. But if a breakout of the resistance line happens, it will be another level of opportunity to continue that uptrend move. So you can see how crucial this area is for us as we head into today's trading session. Now, before we go into the fundamental factor, let's really understand the sentiment in the market. What are the major drivers that will be influencing how market participants will behave around this important confluence today? I also want to reference my updates from yesterday's trading. Is it yesterday? Yes, yesterday, I guess, where I updated us with a new trading setup on the 15 minutes time frame, which actually helped us to capitalize on that second buy position we took. Now look at the structure here on the 15 minutes time frame. What a beautiful ascending channel we have here, leading into that 2640, which was my TP target area. Now price is back into a structure. Now before we go further here, let's understand what is the major driver in this market. Now if we look at things from the US dollars perspective, we do understand by now how the US Treasury bond yield is favoring the US dollar right now. We know that the US Treasury bond yield is directly proportional in value to the US dollar, and the renewed gains in the Treasury bond yields are bolstering the dollar and pressuring the gold asset at this point. Now, the equity market on the other side is optimistic, as a positive risk tone in the equity market is diverting flows. May likely, yes, let me put it that way because nothing is certain in the market, may divert flows from the safe haven asset like gold, silver into it. And then the rate cut speculation currently is fading. In fact, according to the CME Fed Watch tool this morning, there is an indication of lower odds of December rate cut, limiting gold's upside trajectory. Now, because of the incoming administration, the incoming US administration, which could spark inflation, but also could also curtail significant rate cut by the Federal Reserve, favoring the US dollar and not exerting selling pressure on the gold commodity. However, putting all of this into perspective, the geopolitical tension is one thing that could still drive flows to safe haven assets. We all know that in eras of geopolitical uncertainty, investors are always willing to put their money in safe haven assets. So we saw the Russian-Ukraine conflict. We saw Putin updating their nuclear doctrine, and Ukraine's use of ATACMS missile could also fuel safe haven demand. Now, the nuclear risk is there. We don't know what the outcome is going to be. So today, market will be monitoring what Russia's response is going to be to the usage of these long-range missiles in their own territory. And this keeps geopolitical concerns elevated and could continue to support gold as a safe haven asset. Now, besides that, market will also be focusing on the FOMC member speeches. We talked about this earlier. We have about 4 speeches coming up today between 3 p.m. UTC and 9 p.m. UTC, and these upcoming statements could influence market expectation, and I still strongly believe that the potential to the upside is still very strong. However, in as much as this personal sentiment is there, how do I think the market is going to be digesting that information? Well, the answer lies right here on the chart, as we want to be looking out for structural details that will help us to see what market participants are thinking. Now, to guide our decisions today, the structure I updated us with yesterday evening still remains valid. As you will see, price is right at the support line of that ascending channel. Can you see this support line right here? Let me highlight it for clarity's sake, so you can see price in the last 2 to 3 hours has been oscillating around the support line of this ascending channel. Now the question here is, will price respect that support line in an attempt to continue that uptrend move? So we have been seeing something like a sharp buying pressure. We have an engulfing bearish candle here. If this is going to happen, I want to be continuing my uptrend move. So in that regard, I would like to place a buy stop order. So that will form a reversal pattern if we have price climb back above the support line of that range bound structure, which is right above the 2,626, to continue that uptrend move. So I will be having a buy stop order sitting above the 2,626, and of course you want to be having your stop losses way below the previous low, which is about 50 to 70 pips to be our stop losses here. Remember, we want to be giving enough breathing space for price action to move around. So I'm looking at that possibility here to continue an uptrend move. Now, if I am going to be selling right now, though some of us will have sold here due to the breakdown retest of structure, but I still don't feel comfortable joining a sell. And the reason is basically, if you look at what has been going on here in the last 3 hours, you will see that we have some buy pressure resume around this area, giving us a support line to work with. So if you are taking a sell at the breakdown retest of the 2,626, I will be advising you to move your stop losses, secure the positions, as buyer still has a chance of pushing price to the upside. Now, for me to consider selling at this juncture, I would rather want to see price break down the 2,621 50-cent level. So you want to be marking this one out too as well. A breakdown retest of the structure will be my own confirmation to join a sell at this point. So let me see, where is my indicator? So I'm selling right below that structure. So by the time price breaks down and retests the 2,621.50, price will have indeed broken down the support line of the ascending channel, and of course will also have taken out all the buy positions within this area to give us a confirmation that sellers are here to stay. So you can see how crucial this juncture is for us today, as our center of focus will be between the 2,626 and the 2,621 $50 level. That's about $5.50 range bound structure we are talking about here. So depending on the direction of the breakout today will be determining if we are going to be buying or selling this. So let's allow the market to mature. There is an indecision going on here. Let's wait for either the breakout or breakdown of the structure to give us an idea of where the market wants to go. So this is my simple view on the XAUUSD today. So let's see what happens in the next couple of hours. Guys, you're yet to give that video a thumbs up. We have over 10 people on board and still watching, and we have only 3 likes. I really appreciate your support by giving the video a thumbs up. Your like not only means a lot to me, it's a source of inspiration for me to continue to do more of these, and at the same time it allows the algorithm to push the video to a wider audience of traders who may find the content beneficial to them. So please click on that like button, and thank you very much as you do so. And for those who have done so, I really do appreciate your support. Thank you very much from the bottom of my heart. So I will be taking a pause now, waiting for about 5-10 seconds. Let's see if there are any questions or any further clarifications before we start rounding off on today's Forex Morning Mastery. See you around soon. So in the absence of no questions, I want to assume that we are all on the same page. I see you, Torres Master. Good morning to you. Great to have you around again this morning. So it's on this note we want to call it a day. It has been a wonderful moment with you guys, and we were able to take on all of the three financial instruments, identifying simple trading setups that we are going to be using to navigate the market today. I hope you mark them out on your chart as we have discussed. If you have done so, well done, well done, well done to you. So let's exercise patience and see and wait for these structures to mature. And remember, we are looking forward to some bunch of speeches from Fed officials today, which is going to be playing a significant role, especially in the US dollar market dynamics. So you want to be checking out on them as soon as it happens, and let's see how the market will anticipate and react to this event. And secondly, always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding, you want to ensure you have a well-defined risk management strategy in place. And for those who joined us for the first time, I'm very glad to have you. I look forward to seeing more of you. I hope you are able to gain one or two things today. If you did, join us in our subsequent edition. Next time is Friday, 8:30 a.m. UTC, 9:30 a.m. West African time, as we come here again to review how well these assets have done and prepare ourselves for the final trading day of the week, which promises to be another exciting one. So it's on this note I would like to wish us all the best of luck today. Trade smart. Then for the Go-Go Challengers, we are going to be running the Go-Go Challenge today again. Time is 12 p.m. 11 a.m. UTC. We are going to be starting again, I think about an hour into the New York session. We're going to be scalping the gold market together. So get ready for that one. I look forward to seeing you guys there too as well. So on this note, I want to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.